I'm Marvin Fertel, and I'm the President and CEO at the Nuclear Energy Institute, NEI. And for those of you that have been to our meetings before, a couple of you have mentioned that it seems like whenever we have these morning briefings, we have some weather event, usually snow, sometimes rain, and today wind. And I said that's only, this year we decided we'd be really politically correct because wind is very correct in DC right now, so. Okay, welcome to our annual briefing for the financial community, and many thanks for taking the time to join us here this morning. We all know that the electric power sector, like the financial services sector and the rest of our economy, is under stress. The nuclear energy industry is certainly not immune to that stress, and we have our own challenges, and we'll get to those during the discussion today. But even in these turbulent times, nuclear power, we believe, is an island of stability. For the nuclear energy sector, 2008 was a solid year by any measure, whether we look at safety, whether we look at profitability, or public opinion. Here's what I'll cover this morning. We'll show you that the operating fleet had another excellent year. We'll give you an update on new nuclear plant development. Last year, companies submitted 13 license applications for new nuclear projects, bringing the total to 17. Over the last several years, the industry has invested over $4 billion in new nuclear plant development, and plans to invest approximately $8 billion in the next several years to be in a position to have plants operating in the 2015 to 16 timeframe. And finally, our expectations for 2009. New jobs in carbon-free energy are at the top of the Washington agenda. We deliver both reliably, and we think that makes a compelling story for nuclear. Last year was another outstanding year for nuclear plant performance, and we do not take this success lightly. Safety and reliability of our operating plants is always will be our highest priority. It drives public confidence, political confidence, investor confidence, and earnings. We continue to achieve industry-wide average capacity factors in the 90% range, which reflects excellence in operations and management of our refueling outages. We estimate last year's average at 91.1%, slightly lower than 2007, partly because we had 10 more refueling outages last year. Total output from the nuclear fleet in 2008 was roughly the same as the record high in 2007. We still have some room to grow output from the current plants through power uprates. Power uprates totaling 726 megawatts were approved in 2008, and through 2013 we anticipate over 2,800 megawatts of additional uprates. That's equivalent to 2 large new nuclear plants. The industry just passed a milestone of over 50 license renewals granted by the NRC, with several more in the works. All but 8 reactors have received, applied for, or announced license renewal for an additional 20 years of operation. We expect all of them will. The next significant nuclear contribution to the grid will be from the Tennessee Valley Authority's Watts Bar 2 unit. The TVA board approved completion of Watts Bar 2 in 2007. Approximately 1,500 people are at work today. Procurement of long lead items is underway. The bulk of the engineering work is expected to be completed this year. The $2.5 billion project is on schedule and budget for completion in April 2012. Like the $400 million refurbishment of the Fort Calhoun station and the $1.8 billion restart of Browns Ferry Unit 1, the Watts Bar project is another example of how the U.S. nuclear industry is successfully managing large-scale engineering and construction projects. As I mentioned earlier, we had our best year ever measured by the Nuclear Regulatory Commission's reactor oversight process. The NRC inspects and measures 17 different performance indicators to evaluate plant safety. These performance indicators are designed to identify negative trends long before there is any reduction of safety margin. These indicators are aggregated, and each plant is placed in one of 4 categories or color-coded columns. Top performing plants are in column 1, which is shown here as green, and indicates a plant requires only the baseline regulatory oversight. 93 of our 104 plants are currently in column 1. Column 2 through 4 receive increasing regulatory oversight. Currently, no plants are in the mandatory shutdown column. We have told you in the past, but it bears repeating. First, we continue to see the renaissance of nuclear power developing at a measured pace. We expect 4 to 8 new plants in commercial operation by 2016 or so. And second, the new nuclear projects now being developed are still relatively early in development. And given the size and cost of these projects, you can expect to see companies proceed very deliberately. You should not be surprised to see changes to project schedule, project ownership, and project structure as companies get closer to build decisions. New combinations of companies may line up behind certain projects. We have already seen signs of this kind of repositioning. Several companies have announced a change in reactor vendor. Others have asked the NRC to suspend their review of license applications pending choice of a new reactor vendor. We believe this is a normal part of project development. Our companies are still completing the detailed design and engineering work that will deliver firm cost estimates. But even with this uncertainty, it's clear that there's a solid business case developing for new nuclear power plants. The United States will need new baseload capacity in the years ahead. Even with massive efficiency programs and extremely low growth rates in electricity demand, and clearly a portion of that new capacity will be nuclear. The range shown here, from 133,000 megawatts to 216,000 megawatts by 2030, are taken from a recent analysis done by the Edison Foundation. These numbers assume an extremely low 0.7% per year growth in peak load. Just to give you a sense of how aggressive that assumption is, aggressive in really getting a lot of efficiency improvements, the Energy Information Association's forecast out to 2030 is twice that, about 1.5% annual growth in peak load. Even that would be a big drop from historical performance. Annual growth in peak load between 1996 and 2006 was 2.1%. So the U.S. will need substantial new generating capacity, including base load, even with aggressive efficiency that far outpaces what we've ever achieved in this country. Based on EIA's forecast of future electricity demand, we estimate the United States would need 20 to 25 new nuclear plants, or about 30,000 megawatts of new capacity, just to maintain nuclear 20% of U.S. electricity supply. I think everyone accepts that some form of carbon control regime will be in place by 2016 or 2017, when the new nuclear projects now going through licensing start commercial operation. As you can see on the chart, in a carbon-constrained world, the need for new generating capacity increases because companies will shut down older coal, oil, and gas-fired steam capacity that will not survive the transition. So we see a solid business case evolving for new nuclear power plants. We hear concerns by some in the financial community and elsewhere about the